Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording on January 31st, about a half an hour after the close. On today's show, we're going to discuss what came first, the cycle high or the Chinese AI. My name's Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
I didn't even mean to make that rhyme, but it did. As I'm saying it, I'm like, wow, that's going to rhyme.
Well, they all rhyme. You know how it goes.
Yeah,
You know how it
so
goes with cycles, right? What did they
yeah,
say?
so they
Hmm.
don't repeat, but they certainly rhyme.
Yep, yep.
Well, we started the week with that reaction to the delayed reaction, I might add, to the Chinese AI with the a big gap down. We
Hmm.
spent all week filling the gap, and then here late Friday we get the big close. What do we make of it all?
Hmm.
Is it the Chinese AI's fault? Is it the cycle's fault? What is it?
Yeah, well, let's take a look at that. In a way, we kind of, if we were were to record this in the morning, we would have pretty
Mhm.
much been exactly where we were a week ago,
Yeah,
Friday. And I was thinking about that. We're getting, especially on the futures chart, we were close to 125, and I was like, oh my God, we're just right there all over again.
right.
And but luckily, you know how it news is these days.
Yeah.
So, all right. So Chinese AI or the cycle. Well, you guys all know, we all know the cycle came in first, and we've been talking about the cycle for a while now. And that's just it's just sort of how we have to look at the charts. We don't really talk about news much
It's
because
like we
news,
talk it's like we
yeah,
talk about with the when we see patterns. First the pattern, then the news.
exactly. So that's why we stick to technicals because news always follows. And
Yep.
it's news really, it's news to us, but it's history by the time we hear it. And
Hmm.
we're always behind the curve. And at least with patterns and technicals, there's some kind of a probable outcome. So, we're free to at least bet on the probabilities, right? Like we talked about last week.
Hmm.
And so getting into, well, let's start with the cash chart today. Well, we left off right at these highs at 61.13 last week
Yep.
and how we were just pressing against it. And you guys can check if you're new to the show, you can check our last video or the last several videos and sort of fast forward to the markets that you follow. And we talked about how this was the perfect false break setup if
Yep.
we take out the low. The potential was very high. And the reason why this would be a false break and not the high is because the real high came in, back here in December when, the weeklies and everything else sort of lined up.
Hmm.
And we've been, I mean, that worked out okay. We got a decent correction. We got about a 90-degree correction here. And go ahead, Ben.
No, no, I don't have anything. Go ahead.
Uh-huh. Okay. So we had a decent correction and we were watching to see, what the next bounce, where that would stop. And we were looking for ideally a lower high, but it's possible that we would get a false break. And so we were sort of mapping out the different possibilities, I guess, scenarios.
That's correct.
Yep. So last week the scenario was, handed to us, which was basically the potential of a false break. And there's no better sign of a false break than a fast move in the other direction. And boy, did we get that on Monday, right? In spades.
Yep.
And if the speed is too fast, then of course then you get this kind of a bounce where you have to deal with the aftermath. If this went down, one day at a time, a little bit at a time for 3, 4 days, then it wouldn't, then the counter trend might not be that sustained. I'm thinking just in technical terms, not considering the news.
Hmm.
Anyway, so we got right back up to pretty much where we were last Friday, and then we broke down again. So, what's the story basis the daily? The story is pretty much the same. The high still stands, the false break high still stands, and the high still stands. So we're pretty much bouncing off the 61.13 level on the SPX and really waiting to see what happens, if we get under the 60-20 level. 60-20 is really the next level to watch. Obviously, we can consolidate in here. And even on the up move, after you can see Tuesday, once we got above that, sure, we did a little dip to flush things, but once we got above that, you can see 60-20 is really what got tested 2 days in a row, right? Wednesday, Thursday came down, and then we started to grind higher. And even today, we have a higher low, considering, looking at the weekly low, daily lows, and
Hmm.
that's above 60-20. So 60-20 is really the level to watch next week. And if we get some kind of a move, let's say we get another Monday gap down below 60-20,
Right.
well, I think that's probably going to take us a little further than the Monday low. So we have to watch it carefully. There's no way to analyze all the news and between Chinese AIs and Trump's, narratives every day and news and breaking news and everything else is too much to, this is it's funny. Last few episodes, we've been talking about the psychology and how we separate news and the impact of news on our trading decisions and how we manage, how difficult it is to manage to stay tuned with your work and technicals and not to get distracted by everything else. And boy, it's really showing up now, right? So this
Hmm.
quarter is going to be, that's really going to be the theme. And it's like, can you really stay disciplined and stick with your systems and methods versus being swayed by all the news that's coming out? I think we set up a good theme for the year, just just starting in January, as far as the end of the show talks go. And if you guys have missed it, go check them out and comment on them, see how you approach these same questions. And for traders, these are continuing questions that we need to always keep in mind. And if you like our work and like our comments and stuff we do, please remember to like our videos and share and subscribe and do all the things. Getting back, so that's kind of the story with the S&P. We talked about the high, we talked about the false break, we talked about the counter trend here. And so really, this really sets up for next week. I mean, oh my God, think about this.
Hmm.
We
Hmm.
have a false break, big drop. Sure, we tried to do another
Rally
little
back. Yeah.
rally back up, couldn't quite do it. And now is it like, did we buy the dip at the right place? The dip buyers would say, and the people that, the bears that are short would be like, oh, did we short at the right place? Because we were pretty much right in the middle.
Hmm.
And so we'll look at the other technicals and see which way this is going. Let's move on to this is the futures chart, continuation chart for futures coming off the lows back in September, October. And here it's pretty much the same story. We got to the 50% line and we've been more or less stuck there. We try to go above a little bit, but you really can't. So 6,100, you can see we've been bouncing, basically tapping it, not being able to do it. And this is not a sign of strength. This is sort of a sign of weakness. Not only that, it looks a little bit, if it was a single stock, I would say that looks like distribution.
Hmm.
But what makes it more interesting is we have this ABCD that completed that, and I would say that's close enough for the type of business that we do. And I would say the ABCD has been met. The only thing that kind of throws a wrench in this is that we didn't start to trade lower right away once ABCD was completed. No, normally that's
Hmm.
the case. You tap it and you start rolling the other way. So here, we get pumped up again, drop and up again. So let's see how many breaths we can take. Here
Yeah.
floating up here. And we also talked about, this is all based on the daily. We have other levels in the lower time frames, but here 58.92 was like the key level we've had on the charts. You guys have probably seen it. So that's really the level that would mark a bigger correction. When I say bigger, I'm talking 2 to 3 month correction, right? So anything above that, we have to treat it as, it's sort of a consolidation like it's been doing, or it's some kind of a distribution pattern. But whatever it is, it hasn't started the bigger move. What we're doing up here when we talk about, the highs and false breaks, is we're trying to get positioned because we know at least it's going to go there, right? If we go lower,
Hmm.
at least
Hmm.
there. And then we manage to trade accordingly. And 57.51 is another key level. It's 270 degrees up. That's really important. and we haven't even touched it yet. But what if we do? That's really going to things. That's when these little bumps and nicks are really not a panic. I've thought that panic and this fear, and this is not panic and fear. I think panic and fear starts when we start breaking these levels, the
Hmm.
5750, and we're not quite there, but we really want to take care of the highs here. And the reason why we're still holding on to the same theme is when we get to the weekly, you will see that there isn't anything else to do. Obviously, we didn't take out the highs and settle above 6,100 and started moving higher. We didn't. Every time we try, we slip, and that's a slippery market. It's not really getting traction above 6,100, and that's where we should be able to hold it if we're going to move. Makes sense, right?
Absolutely.
So, well, there's another. That's a futures calendar day chart. And we have a price sentiment squaring out today. It's right there.
Hmm.
And here's, well, this is the important chart. So this is the
March contract.
March contract and the 90-day cycle that expired and that got the highs into place. And was the primary driver for the big cycle high that I talked
Hmm.
about earlier, but that was the cash chart, right? So if you look at the futures, we came up into 90, perfect 90. And we corrected. I would say it's a decent correction,
Hmm.
but we talked about when the weeklies and dailies line up, and if you guys can go back to when the early December episodes or late November, we talked a lot about how the largest cycles were lined up. We had the weeklies, we had monthlies, and all kinds of indications. So once we got into the actual high, the 90 came in, we were really on top of it, looking to trade that. And one of the options at that time was, well, these counter trends could come up all the way and put in a false break. I mean, that's sort of the last option, right? Meaning
Sure.
that's outside of a lower high.
Hmm.
And the futures hadn't done it yet, but we know cash did. So there we go. So the reason I'm showing this is to show the 90-day cycle, because I can't put everything on one chart. So we'll just jump around a little bit. And the Dow chart, Dow futures. And again, pretty much the same scenario, right? We're sitting
Double
here with,
top Dow.
yeah, we're in doubling, a little slightly above double top, right? So,
Hmm.
but the key is we're bouncing around the 50% line, and we did a false break up here.
Hmm.
So finally, when the Dow goes up, it does a false break. And I'm thinking, wow, is this the one, Elizabeth? Is this the one?
Sure,
It's a
sure.
big one. We don't know, but it looks, so far we have to go with what the chart's saying. The chart's not saying this is we had a big rally today. No, we had a big outside reversal on the Dow.
Mm.
So that's to be not just an outside reversal, reversed the whole week, didn't it? Let's see. Yeah,
Wow.
pretty much, right? One,
Hmm.
2, 3, 4 days. Um, Now, I had drawn up this zone thinking, this is when the market was back in middle of the year last year. Like this area should be good resistance. Obviously, we push a little higher. So on the way down, we really want to get below 44,300 to really, that would be like the yellow flag and really telling us that downside is getting some traction. But for starters, stuck below this 50% level would be, I would say, like the first indication, because it is the 50%. So 44,900, 44,920, that's pretty much where that comes in. So watch those levels and
Hmm.
watch this 44,300, if it's going to hold or not. Because remember, Monday we already cracked it. So it's not like it's some sacred level. So once it get below that, then on the Dow, we have this 43,723. Now, if we get trapped under it and all this becomes some kind of resistance, then you know, we've seen all the evidence we have to see, then downside, some kind of logic correction is definitely going to be in play. I'm spending time talking about this and building a case for the downside because it's a real possibility. It's more than 50-50 at this
Hmm.
point.
It's higher. What I keep saying on the posts I put on Twitter is the probabilities are higher than normal. I
Yeah,
mean,
it's way high. Yeah.
normally the market goes up, right?
Mhm.
The bias is to the upside, but right now the probabilities are tilted to the downside, and that's unusual.
Yes. Yeah. And well, yeah, it's very unusual. But we have to talk about it, and we have to put those, look at things through that lens. Otherwise, we're
Hmm
always going to be caught blindsided, right? So
hmm
we want to make sure we talk about all these things. So we'll talk about, well, let's jump to the weekly. And well, before we do the weekly, let's look at the 30-minute chart.
30-minute, yeah.
So 30-minute, this is the one I think from last week. This was 60.79. I moved it up 1 point, so it's 60.80. It's a 50% level. And you can see we kind of battled it out, which way. I didn't post a bunch of these updates because we've been in the same range the entire week, not much, whole lot to say. But the 61.25 was a big deal over here on the 24th when we left off, because the comments there was, if we get below that, it's definitely a yellow flag, right? Things are
hmm
things are gonna not good, especially since we couldn't quite get to the 61.71, 180 degrees up. So it's a sign
Right.
of weakness. And with sign of weakness is when the sign is clear, it's weakness. So taking out 61.70, 61.25, quarter of the square would signal weakness. So that's why I mentioned that. And we got that. But ever since the low came in, which held around, this 59.48 level, then got above the 90, we've been making higher lows. So we've been grinding it up, grinding. And today we got above 61.25. I'm like, wow, great. Let's see if we can hold above it, because really the test is if we can go up and tap 61.71, right?
That's
And
right.
I don't know if you can see this, but if you can see the 7/8 line, which is right there,
Yeah,
around
caught that
61,
high.
yeah, 61.48. So there's no, it's not a accident that, Gann talked about 7/8, 5/8, 3/8. These levels really come in handy when you put it all together. You want to watch these things. And if you take the 7/8 there and you take the quarter here, you add them all up, you can start getting the counts in terms of the
Hmm
degree of moves. Anyway, so 61.25 broke down, and there we had a fuse line right around there today, this morning. And once it got below, well, that's it. And we blew right through the 60.80. But we're starting to hold around this 61, 60.58. So seems like 60.58 a level that we're going to have to watch next week. So it's really between 60.58 and 60.80. This is the block we want to watch. If we can't really get above 60.80, I think we didn't, in short notice, we're going to get down to 6,000, then 59.50. And next time we go, this is probably not going to hold. So that's what we want to watch for. Now, come Sunday, Monday, we get on top of 60.80. Obviously, then there's a little bit more to go. But
hmm
watch the 60.80 is really important, how we do there. Kind of like in the same spirit that we talked about 61.25 here on the 24th. You guys can see how that played out. So
hmm
so this is the same deal. So watch them. All right. So that's that. Let's take a look at the weekly. This is the weekly cash chart, and we've been watching this. I didn't give it up. So,
hmm
and main thing is because of this big ABCD. I mean,
Which finally finished.
which finally finished,
Yep.
that's the thing. You just can't give up on them. You have to
hmm
watch it to see the completion. Either we're going to get on top or whatever happens, we have to watch it. And the geometry line that's tracking this dotted line, you guys can see, we tapped it here, corrected, came back up, kissed it from below, and well, and this week, we traded lower. So that is the level we were watching on top of the square. Square wise, 144. There's some other things happening. This square just happens to be running from the low where the ABC starts. But we
hmm
have other squares that start at the levels, and I've talked about them. So I don't want to take a bunch of time moving these around, but just to say that near the high we had a lot of good counts. Okay, so it's not some type of an accident. do 144 high to high. You guys can see the numbers, 144 there. We had 55, we had 108 from that low, we had 240 from that. So we have a lot of weekly counts coming up in here. That's why you don't want to get rocked by this news event or that news event. Really keep the eye on the target here, keep the eye on the
Mm-hmm.
prize.
Mm-hmm.
And that being said, obviously, if we take out this week's lows next week, that's going to be a little troublesome. So, so
And
let's,
that level is 58.10, right? That's that 144 level.
yeah, I think that's 58.10. Let me see. I know how yeah, it's 58.10. That's a
Mm-hmm.
144 level. And, as you can see, it's already setting up for that. Boy, what if that goes down, comes back and gets stuck there, that could be kind of substantial, about as much as this leg, the XA leg we had earlier.
Yes, that's correct.
More or less, it could be a little more, maybe a little less, but it's not going to be a little dippy correction.
No.
So, so anyway, that's it. And and now you guys saw the 90 cycle come in. We talked about the resistance. We talked about the pattern completions, ABCDs. So all of that stuff is in play. And if we didn't have enough circles to play with, I just, all I did was I took the circle that was here
Mm-hmm.
from the old contract, back in December contract, or I think maybe September one, and I just moved it up and lined it up horizontally here,
Mm-hmm.
and see how it lined up with the high, and that connects, right? It
Sure.
blows over a little bit here, but that's okay because that was a lot of enthusiasm, and it was before a lot of premium built in because this is in August
Mm-hmm.
or a March contract, so that's okay, acceptable. But here's the interesting part. We hit the 90 by 120 at the high. So we did square out. And we talked
Sure.
about this earlier. And this is why I keep bringing it up. Like, oh, you guys are always talking about highs. Well, hell, we had a high. What else am I going to talk about? There's nothing,
Mm-hmm.
nothing else to talk about until that high gets taken out. Have we taken it out? Taken it out? No, we haven't.
Nope.
So, well, now we're trying to navigate these counter trends and impulses and corrections and trying to get positioned when the opportunity is there for low risk entry. And so here, now we're past the middle of the circle. We're starting to, move over. We already did 30 days, 45 days out now from not quite 45, almost. So we're 30 days out from the high.
Mm-hmm.
We didn't take it out. If we don't take out a high in 30 days or so, we really have to be watching that because this part could start to correct on short notice. Again, I'm talking about that in a certain way because until that gets taken out, opportunity to the downside is highly, well, not just probable, but profitable.
Yes.
So, so that's my take on it. You want to add anything? I just want to do all of the S&P charts in one sweep and be done with it and move on. So,
I guess
and to get the sentiment across, like what are we really
sure.
thinking, right? Okay, go ahead.
The circle, the one comment on the circle is when you can't even get up and touch the edge of the circle, it's a sign of weakness in this case.
Mm-hmm. Mm-hmm.
So
Yeah, that's
uh
usually the case. And this is a
everything
pretty good
yeah,
circle because we did,
it's very
we
good.
touch it here perfectly, touch it at the high.
Hmm.
And yeah, but even without any of this, we can see we have a lower high and another lower one with a big, you know, big turn down. So we'll
Sure.
continue to watch it and see what happens.
Yep.
And we're trading this one day at a time, one trade at a time. So anyway, here's the weekly chart. This is the one I mentioned earlier. Why we're sticking with the plan, and the plan is that we squared out in a big way in the weekly charts, and you can see the same ABCD. It's in dashed blue line now,
Hmm.
and so as you can see, we didn't take it out. we're not quite on top of the 50% of the square. So long as we're not there, it's weaker. It's on the downside. Now, really looking at this square basis weekly, 225 degree, this 57.96 level is the level to really watch. And we're a little bit away from that, but you can see like a couple of weeks ago we were there. It wouldn't take long to visit these places that seem so
No.
far away.
Mm-mm.
And if things were all clear for investors and traders, I'm sure we'll be way above this 50% level. And clearly we're not.
No.
Even though, for protection, I drew up a little buffer zone up here in case we get too enthusiastic. But we haven't even gotten there. We haven't gotten above that. So it looks like um, the prices are respecting the cycles that came in, and it's starting to get traction. And sometimes, it takes a little bit to get traction and get things rolling. So I think looks like that's what's happening.
The weight of the evidence is mounting on the bearish side. Let's put it that way.
Yeah, I think that's a fair assessment.
Mhm.
Yep. hmm And so what you guys have to do is, get your systems in order and look to profit from that.
Mhm.
And you guys are getting this stuff. And I don't think anybody that's going to watch us like the first day and go, oh yeah, let me just trade just like they say. But you guys have been watching it for a year or so, or longer, or even a month or two. We don't do a lot of bells and whistles, but if you guys really listen to everything, I think the markets have performed pretty well in line with what we're thinking and what we're talking about. Would you say, Ben?
Mhm.
Just to say.
Good
So
example is bonds.
good example is bonds, exactly. So anyway, so last week we talked about, letting the correction finish. And, we did come down to 50% of the square, which is support. And we talked about how 116 and a half is like the major resistance. We don't have a clock running on the bonds, but let's let it finish up. Um, Although we did make a lower high, lower low today. We'll
Mhm.
have to watch that. We'll take it from there. Bonds are basically, we're in a downtrend, and you guys can draw your trend lines and see. There's no question. So, and we really didn't get a time and price score out at the low. We just had a price support. So I feel like the bonds are still, the trend is still down, and, and it doesn't mean we can't consolidate. As you can see in the chart, bonds consolidate all the time. So let it finish up, do what it's doing, and we can pick it up
Mhm.
the other end. Here's the weekly bonds. We have an ABCD target down here. And 114 was the key we were watching. Can we really push above that, or can we stay under it? If it was staying under it, it'd be very weak and it would roll over with ease. But what's happened here is, we're sort of stuck at the quarter level of the square. This is square of 72, running off the high in 2020. And boy, ABCD would be pretty proper here. And we do have a Gartley running here, XABC coming into a D. So
Mhm.
we haven't quite got to the Gartley either, but doesn't mean we can't put three legs into the Gartley, right? We already have two in place.
Mhm.
So it just seems like bonds aren't done yet. And for the last, what is it? 1, 2, 3, 4, 5 weeks, 6 weeks, we've traded within a 1/8 of a square. So it's pretty tight. Not a whole lot of range compared to the square we're running. So
That
we'll let,
114, 115 area is really tricky right now. It's sticky,
yeah,
and as long as
yeah.
we're below it, you got to be careful. It's
Right.
going
And
down.
114 being the key. I mean, we close at 114.05. So,
Hmm.
5 clicks are not enough to build a lot of confidence for me, but I
Right.
would definitely watch the high and low next week, especially the low, if that happens to be the way we go. That would
Hmm.
mean a continuation for sure, right? Because the daily's already blowing through the levels by then, because since we already have a reversal here. So watch to see if we can get above Thursday Thursday's low. I think that would be a good way to approach it. All right, getting into crude, pretty much crude did the trip. We went from 79.50, which was resistance, came back down to 73.50, which was support, when even dipped a little below that. And that shouldn't be a big problem because, that's kind of where structural support is, all these things we've talked about. If you guys follow us on crude, all the stories. So I don't want to repeat it. Um, every time.
We're
So
back to the
basically,
middle of the range,
yeah, we're
basically.
back. There you go. Put it simply, we're in the back in the middle, and let's watch. Basically, you have to key off at 73.50 from here. So either we get below or
Hmm.
we get above, and start punching upwards again. Otherwise, we could sort of consolidate above 73.50. But watch that line. That's a key level to watch for crude. Looking at the weekly, pretty much we're back to this tranquil looking chart. Um, the 60 up from the 2020 lows are really, that's held really well. We ran up a quarter, came back a little bit more than a quarter, more than an eighth. Structural support here. We came down for a couple of weeks, so let's see what happens. Watch those levels. It seems like it's time to consolidate, or somewhere above 73.50, consolidating above that would be, I would say, is bullish than bearish. If we start to consolidate below 73.50, then we could get down into 68 or lower. So, but we're keying off of 73.50 for now.
Hmm.
Next, we have gold. Here's another one where everything worked out pretty well. We were, once we hit 240, we were looking for some kind of a correction. We got the correction, then we did a triangle. And last week we talked about how the triangle broke and came back to retest it and bounced off of it. And long as we're above the quarter or the 1/3 level, this area where we broke out, gold's in pretty good shape. And you can see how, when gold broke, it broke very clean. Where did it break? No, it's exactly where the square line was,
Yeah. Yep.
And this is the beauty of it. If you guys have been following us with gold, this chart's been here for months and months and months. So we don't
Hmm.
really move the charts around unless we want to just take another measurement. But just to say, now the level to watch, obviously, is a 240-degree level, and that ends up being about 27.90. So that's a level to watch next week. Long as we're above that, any kind of a correction and whatnot, we could expect gold to move higher. So that's my take. I think this the 27.90 is the level to watch. It's a key level to watch.
It also shows you a good example of why you wait for the triangle to break.
Oh, absolutely, and hopefully retest, and which
Yep.
most triangles give you, unless they're really thin markets. So
Yep.
we're okay there. Um, well, here's the weekly gold chart. So here's why it's kind of exciting, is because we were waiting
Significant.
to,
Yeah.
yeah, last week we came up almost to 27.97. We were right there in the zone. And then we talked about, well, this is great. We even closed above it, but if we can get above it, that's really where we shift gears. And as long as we're
Hmm.
below that level, this is, yeah, it's bullish because it's above the third, above the quarter, but it's not quite, run time. But if you guys got in through during this support down here, okay, great, good shape, because we talked about that too, being, in the big picture, how, even down at the 72-degree level, how bullish it is, even at the 50% level. And here we saw how far above the 50% the lowest came in, right? The first counter trend.
That's right.
So yeah, so looks like that triangle is done. Well, since last week, and gold is starting to move.
Yep.
Um, and God knows we've been bullish gold
For a long
forever.
time. For a long
For
time.
I think since we started doing the podcast. All right, so silver, the same thing. We talked last week. We talked about how the low squared out, and the odds are we're going to move higher,
Hmm.
and that we and so we did.
Look at
And I
where
think,
that bugger closed, man.
yeah, right, right at the 50%,
Right on the half
just a
square.
hair lower. Yep.
Yep.
So I think if we can get above that next week, that's great. And that level happens to be 32. Let's say 32.32, so you can easily remember.
Hmm.
If we can get above that, um, silver's in great shape. You can draw your trend lines from here. So the square is down below, so it looks like upside is open. Yeah, we might correct a little bit. You get good structural support, 31.60, let's say 31.70, 60.70. And if we can get above the 50%, good shape. Let's take a look at copper. Copper is kind of holding its own. We did break out of the triangle and the downtrend, and it's holding fairly well. It's not running like gold. So that should give us some indications of what's coming up around the corner, right? As far as
Hmm.
economies go. I would say it's a little bit of uncertainty because the lows look fairly solid. They tap, 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 nothing happened. Buying came in, and now, you know, we just have to wait and see. I think the level to watch now, long as we can do above like 420, we're in pretty good shape, but I'd like to see it get above 430, which is the quarter of the square. Otherwise, we'll probably see some price action like we did here, where we just consolidate between these two levels. So that's the deal for copper. And copper weekly pretty much pointing to the same thing.
Yep,
So
sideways
sideways, and there's a,
triangle.
sort of a triangle being built in there. But the
Hmm.
best news is we're still holding about the 144, and if we can do that, and that's 422. If we can hold above that, I think then you know copper's got more well probability of a move higher than lower. So we want to really watch that. And you can see we've been wrapping around that price 422 for quite a while now. So
Absolutely.
let's see what happens. Let's move on to the dollar.
Holding that 60, isn't it?
Yep, yep. And the 107.25, which we talked
Hmm.
about.
Hmm.
So we held 107 and a quarter, got above the 60, and now looks pretty primed to move higher. Don't you
Sure
think?
does. Sure
Yeah,
does.
yeah, yep.
As long as it's on top of that 60 and the 107 and a quarter, you're
Mm-hmm.
good. You're in good shape.
Good shape, and we can get up into the 90. I mean, then we'll have to think about, where's resistance, and that's right around 1160,
Hmm.
11160, 112. You can see that's going to be some kind of a resistance zone, no question about it. So
Sure.
let's see. We can deal with it once we get there, but long as we're above 60, definitely a dollar to the upside.
Hmm.
Keeping things simple.
That's the best.
Right? Yep. Yep. So here's the weekly. We've talked about this a few times, but the main thing is we held about 106 and three quarters on the correction. A couple of weeks down, everything seems fairly normal. So really, the next, basis the weekly anyway. The next level to get above this 109.80 area, and we'll see how we do. But for now, it held support and held well above support. So the market looks up. We had a couple of corrections. Remember that first run up, we were a little bit concerned because we didn't even have one bar correction, right? So
Right.
we had a couple of weeks and another couple of weeks. So it's doing two bar corrections on the way up. So it's very bullish. And I would definitely treat it that way. And we've been bullish the dollar about as long as we've been bullish the gold.
Yeah. Which they're usually inversely related too, which is
That's
like
right.
kind of
That's
kind of
right.
ironic. Yep.
But we stuck with it,
Yeah.
and they
Because
both
that's
went
what the
up.
charts told us.
Exactly.
Hmm.
All right. So the other thing we stuck with on the short side is the euro. Like the longest we can remember, it's been it's been to the short side,
Hmm.
and with good reason. Ever since we got the highs in 23, um, that was kind of it. So last week we talked about the 90 degrees up, or the 90 degrees down rather, from the 2023 high. That being, well, that's our support resistance we broke through. And I thought, well, let it counter trend, and if the market's weak enough, it'll be below the 90. Otherwise, we'll have to wait till we get some kind of a reversal. So this week, the market euro was very weak, went up a little bit higher, and reversed, and now we're below the 90 again. So that,
Hmm.
let's say 109, let's say 09, let's say 39.50. As long as we're below 39.50, I would say euro is definitely on the weak side, unless we can settle above it, right? So let me put it this way: till we settle above it, I would consider the euro to be weak, and trade on the short side, which is pretty much trade on the short side. Pretty much been the mantra, but
For a while.
yeah, for a while. And what to
Hmm.
do?
Hmm.
Not much, not much else we can talk about there. That's the euro daily, and going on to the weekly. You can see we couldn't hold the 50%. Last week I was a little bit surprised. We snapped above. I was like, well,
Hmm.
let's see if we can hold above it. And we couldn't. That's 41.91 is the level there. Couldn't hold it. We reversed immediately. So that shows there's weakness. And well, I mean, the key thing here is look how long we held above that 50%, right? all this.
Hmm.
So that is some overhead. We can't really say that's nothing, right? It's quite a bit of overhead. So when they start slipping, it could really slip. And I'm thinking we're going to visit the 22 lows, if not lower. Let's see. Nothing to change that scenario at the moment.
No, nothing's changed there.
Mm. If anything, it's getting worse. The
True, because it just
evidence, the
can't
evidence.
can't show any strength.
No, no, not much going on there. All right, next we have the Hang Seng, which has kind of been, you know, trouble free and kind of minding its own business and trading in our range. We talked about 19,450 and 2380, and you can
Hmm.
see today or last night they tapped 2380 to the upside, and we started from the 72 degrees up, this level here. After the false break, we called out that false break. Soon after we started to move higher. So now, really, until we get above 2380, not much else to do. We can watch the correction. If the counter trend holds above this 19,450, I think obviously in pretty good shape. And once we break this 2380, we can expect the market to go higher. Up until then, it looks like we're already in some kind of a consolidation pattern. So keep
Hmm.
that in mind. And are you gonna look at natural gas at all this week? Not
No,
much.
because we're
No.
correcting now, so I
Yeah,
was kind of
exactly.
waiting
Mm.
until the correction was done. On my 4 hour, we did a 90 by 90 on the way up.
Hmm.
And so I just think we're pulling back. Let's watch the pull back, and then when we reverse and show something, I'll
Yeah.
put it on
And
again.
we talked about that last week, right? We hit the
Hmm.
resistance up here at 90. We
Hmm.
corrected,
Hmm.
and now it's at a quarter of a square, which found some support along with structural support.
Yep.
So this is a good area. I mean, we could go tick or two below, but right around three is a good fair price.
Hmm.
Well, at least supported on technically. All right, let me put it back to you. We'll look at Bitcoin and Nasdaq and everything else
Yeah, yeah,
and the grains, right? It's a
yeah. The
big deal.
grain. We're gonna talk about the grains. The grains look
One thing nobody's talking about.
like they're all participating now. Wheat kicked up this week, so let
Hmm.
me
Right.
grab the screen.
Yeah. Well, that trend line is pretty solid. Almost got to it today,
Yeah. The
and a quick reverse.
I mean a lot like the ES that you covered and the S&P, this looks pretty distribution-y.
Hmm.
And the difference here is we didn't get up to do the double top and we didn't make a new high. We have a good lower high in place.
Yeah.
The only thing we need to see is if we take out this level here, then it's off to the races here.
Right.
So 2642 is first we've got to get under 21,366 and then it's 2642.
Hmm. But that 22,000 level you get up there,
Mm-hmm.
22,100, 22,090.
Yep.
I mean, we're below that, man. We haven't really been able to take that out
No, not at all.
in any form.
And we tested it here. We tested it two or
Yeah.
three times here. We
Yep.
looked like we were going to push up again today, and then we closed on the lows.
Yeah.
So this looks heavy.
Hmm.
This week, 21,366 is super important. If we get
Hmm.
below that, then it's 2642. And if we get below that, I mean that opens up, 20,000 and below
Mm.
because it could get slippery fast. Because I mean, you could see where this is level is supported by. It was the July high.
Right.
And so if we lose that structurally, there's a lot more room to go.
Hmm.
So overall it looks weak. Let's check out the weekly. The weekly, as you can see, is we had a bar last week that I was excited about it and said, "Hey, we finally got a bar above here." But now we're back to bars, that are crisscrossing. This week we
Hmm.
crisscrossed it. So here that it's that 21,000 level that's key. Get stuck under that, then you got the higher time frame, the weekly pointing towards 18,000, and
Hmm.
that could put some pressure on as well.
Hmm.
Let's take a look at the monthly. The monthly, we did get a close over 21.1. So we closed up here. So this month, the best the bears can do is, a bar that crisscrosses. They can't get stuck under completely. But we did make a lower high and a lower low this month. So we have a down bar. Now it's monthly basis 21.1 is the key. If we start trading under there and get stuck under there, then, again, it's sub 20 opens up. In this case, 18,200. The one you really like, check out this calendar J chart with the 360.
Yeah, look at that.
I mean, that here 22,000 is the key, and we tapped it, tapped it, tapped it, tapped it, couldn't do it.
Mm,
So again, turning down here, opens up the 270,
right.
which is, where's that? That's around, again, below 20,000, 19 and change, near
Mm,
19,000. This looks weaker than the S&P.
yep.
And it's kind of ironic because it led us on the way up.
Hmm. Hmm.
But there seems to be some more issues or trouble in tech land. That's what the chart's saying.
Hmm.
Anything you want to add on the NQs?
No, nothing much to add. I think just follow through with the plan and remember how we got here and all the cycles and just stick with it.
Yeah. Yep. It looks we talk about fat pitches. This is setting up for a fat pitch
Yeah, it could be a good pitch.
because this is a lower high, right? This is
Good pitch
big.
with
This
bases loaded.
yeah. Yeah. The stuff legends are made of. All right, let's take a look at Bitcoin. Bitcoin's hanging in there, you know.
Yeah. Hmm.
What and the technicals are bullish. The only fly in the ointment is this false break we had up here, but look at what it's been doing for the last 2 weeks. It's basically been chopping around, but staying around
Hmm.
that 102 half square level.
Hmm.
And of course we're closed right on it. But like we talked about before, we could correct all the way down to this 73,666 and still be super bullish daily
Hmm.
basis.
Hmm.
Right now, the key levels, if you're looking at shorter term on a daily basis, what to watch. 102,400 is this half square. If we get stuck under it, then we open up, sub 100,000, around 96,000. If we can stay on top of it, we're going to challenge the highs. But all in all, since this high was made, we were only able to correct a square and a half. So that's pretty bullish, bigger picture.
Hmm.
So let's look at weekly. This was a big square, right?
Yeah.
We called that one out. You had price and time right there.
Hmm.
Then we had this little false break, so we had a down week this week. The battle is on right now, and we're sort of dead in the middle here, whether we go to 89.5 first or back up to 108.
Hmm.
But that's weekly range is it can be that. And you can see how important this was when we came down on the correction and tested it. So we don't want to lose that because then we're going to go down and test those other highs, and then we're in the low 70s again. So as long as we're above the 89, we should press to 108. If we get stuck below 89, then a bigger correction is on the horizon. Let's take a look at the monthly.
Hmm.
The interesting thing about this is I always talk about the circle, right? Here's where we push through, and then look at where the lows are. That's how these circles work. They kind of become a magnet where
Hmm.
where the bars will follow it. So does that mean we're going to get a lower low this month? Possibly. But we know monthly basis, the 93,000 level is key because this is that half square. We did make a higher high as well as a lower low this month. So had an outside bar, but closed towards the upper end.
Hmm.
We'll see. Bigger picture feels a little heavier on Bitcoin. The daily has, a lot better structure and a lot better prospects, it looks like right now.
Hmm.
Bigger picture seems a little bit heavy. What's your perception of Bitcoin here?
Well, I'm still kind of respecting that high that came in, and on that basis, that secondary high looked like a false break.
Yeah.
So I think till that gets taken out, I'm more on the bearish side, especially calling out that December high like a big mouth. So now I have to stick with it.
No, but that was a big high. That was a big
Yeah,
high.
yeah, yeah.
We had a nice square there. Let's switch to the commodities now. We're going to talk about all the grains, including wheat this week. Wheat joined the party, and we're going to jump on the grain train with wheat as well. The softs, the only real big action in softs right now was coffee, which is sort of pushing up in this sort of feels like a last push higher. There's no good entries there. The chart is bullish. What we're watching for there is to see if we have a failure at these highs and then start turning down. That might be an opportunity.
Hmm.
Or if we settle on top, and work off a time cycle, then we may be able to, have a decent long setup. But right now, there's just no setup to get in there because we're extended. The metals you covered gold, silver, and copper. Gold and silver are kind of, had a nice push this past week. We might see a little pullback there. Copper's still kind of working through its stuff. Nat gas we talked about. Sugar is interesting in that we got a daily double bottom. So I'm kind of seeing how that's going to set up.
Hmm.
It might make a nice give us a nice entry if we can see a higher high and a higher low on a daily basis. So watching that to see if that sets up. But let's go to the grains. We'll start with wheat. Now I know if you look at this, you're saying, wheat's just sideways. Why are we talking about it? This is a daily, right? And we have been sideways. And if you look bigger picture, we are sideways. But what happened, and I'll show you some more examples in the past, in this sideways, we're starting to get some higher lows
Hmm.
and higher highs. Last time we did that was here, and we got a decent move. We did it here, we got a decent move.
Right.
Did it here, got a decent push. These times we didn't do it, right? And we didn't get the push. These times
Hmm.
we didn't do it, didn't get the push. So this is just starting. If we can get above 578 and get a nice setup, I think you play it to the upside because this could be one of these types moves and actually break us out of this whole big consolidation, which you'll see when we go to the weekly and the monthly.
Hmm.
We talked about for the last couple of weeks, we've been talking about corn and soybeans, and you can see wheat just wasn't giving us that higher high and higher low pattern, but now we're starting to pick it up, which is why I wanted to bring it to your
Hmm.
attention and
Hmm.
everybody's attention. But 578 obviously on the full square is key. Get on top and sit on top of that. Then we got some structure to work with and can push up to this 653 or even the top of the square eventually at 727. But this is to me a sign of life showing up on the daily. Let's jump to the weekly. Uh, almost didn't quite get a close over last week's high, but we had an outside bar this week. Like started the week pushing down, ended the week near the highs, and we actually made a higher high than last week. So that kind of is supporting this feeling of see all along here we were making these lows and lower lows and marginal lower lows, and then
Hmm.
now here we finally got this little push,
Hmm.
and we had the weekly bar on top of this half square. So this again is it's early, but it's supporting the fact that you know the wheat woke up this week and people are starting to buy this thing. And if we make a higher high again next week, then we could be minimally doing something like this and hopefully getting something like this. Let's look at the monthly, get the bigger picture. So here, 595 is key. We're still below it. Uh, this was this to me looks like it was kind of a false break at the low. And we'll go back and look at the daily and you can see. So we made a lower low, but then closed up near the high.
Hmm.
So we may have seen a bit of a flush this week. And that could have been this move right here, where it came down, took out this low here, and then we turned right back up. But the other thing to look at on the monthly, we did high to low here, we did 28 months. High to low here to this low, we did 28 months. If we if we're doing, bigger picture stuff, we could push further. This thing likes to do 90s and 45s. So, it could push us out into 26, 20, late 26, early 27 for where we might see the next push higher. But monthly basis, 595 is the key. Daily, this is the beginnings of higher highs and higher low. Anything else jump out to you on wheat?
No, I think you covered everything perfectly.
Yeah,
Because
it's
the higher
early.
lows, we're starting to go, and I think like you said, as soon as we get above the square line, we could be off to the races. So we got to watch that closely.
We watch it closely because it's
Mhm.
probably boring most people because if you look at the chart, like I said, it looks sideways, but there's these little
Mhm.
little things you look at, and then we know the levels where this thing could really, really get going. And the
Mhm.
price action this week was the best I've seen in a while.
Right.
I just watched the board, and you can see even when corn and soybeans were weak, wheat was showing a little more strength, and
Mhm.
there was buying coming into wheat this week, and we'll see next week if it follows through and if it continues. All right, let's take a look at corn. Now corn has been the leader. Here we've got from the low here, we got 60 by 120.
Mhm.
From the low here, we got 45 by 72. So we squared out here.
Mhm.
Doesn't mean that the game's over. Look, it was a nice move. All the way from August, we had a really nice move up. Let's watch and see the pullback that we get. So far, it's kind of chopping, right?
Mhm.
It's not like falling like a rock, and it's staying above that previous high there. We could pull all the way back to the half square and still be very bullish. So let's watch the correction here. Unless we get above 499, we got to expect that this square had an effect. We're going to see a pullback. Is it a quarter of a square here? Is it a half a square? We don't know yet, but watch the pullback. Once we pull back in reverse, then we're watching this 499 level as what could be the upside acceleration. But we did square out here, so don't be surprised if we chop around or pull back. Let's take a look at the weekly. You can see the weekly's had a pretty good move,
Mhm.
pretty, steady and consistent every week pushing higher. And this week we had a little bit of an outside reversal. So the weekly is telling us the same thing that the square out on the daily is that, okay, we're going to see a correction. Let's see what kind of correction we get. Weekly basis, if we stay above this, I mean, you can't see anything wrong with that in terms of not being bullish. So let's watch next week and the following week, see what kind of correction we get. Is it sideways? Is it a little steeper? Whatever it is, we know we want to be watching for the reversal to accumulate more corn. Let's see the monthly.
Ooh, we got a breakout.
Yep. Big news is we broke the downtrend line last month, and this month we got up above this full square line, this 462.75. So putting it all together, knowing that the daily squared out and the weekly did an outside reversal, that we're going to get a correction. We know that 462.75 is super important for a monthly
Mhm.
basis.
Mhm.
If we can pull back and keep the bar above this full square, the next month's bar, which is February's bar, starts next week on Sunday night. If we stay above this, that's real bullish. That's a monthly breakout where we'll be sitting on top of this, 5, 6 year consolidation that broke us out before. So it's a good setup in corn. If you see some weakness in corn, know that it's due to the square out. watch the levels and be ready to pounce. Because if this holds, then we'll see the daily and the weekly, reverse and go, and that'll have power behind it because you have the monthly supporting the weekly, which supports the daily.
Right.
Anything to point out here on corn?
Now we're good.
Okay.
We're on track.
Yes, we are. The
Yeah.
grain train is starting to roll.
Hmm.
Let's look
When
at
everybody's
beans.
talking AI,
Right. No,
right?
that is true. You kind of like it when no one's interested in it and the charts are shaping up because you can get in and then wait for everyone to pile in.
Hmm.
Okay, beans. So beans started pulling back, right? We started seeing a little bit of pullback here. We did a 27 by 27 here at this high.
Hmm.
We got a little, you can see a little ABCD down, and look where the low was today that we held, right on the full square.
Mm.
So next week, if we can hold this week's lows, that's going to be very bullish. That'll mean the correction was minor. We could move sideways. We could chop around, but we want to stay above this 1,035 because daily basis, that's key, right? Because that puts us on top of everything from August. So daily basis 1,035 is really important on beans next week.
Hmm.
Let's look at the weekly. Weekly, it's a little different story, right? We're stuck under this half square at 1,060. So we want to see, we had a down week, so we're starting to correct. Are we going to get another down week? If so, that means we're taking out the 1,035 on the daily. So that wouldn't be great. That would mean we're going to be doing something different than just maybe a 1 week or 2 week type correction. But if we get above 1,060 next week, that gives us a weekly breakout.
Hmm.
We can sit on top of that half square. Then the bigger prize would be up here around like 1140, where we break the downtrend line. So this weekly basis 1,060 is important. Daily basis 1,035. Let's look at the monthly. Now the monthly, you see 983 is the key number, and look what we did for the full month of January. Low sat right on top of that. After the
Right.
last 3 or 4 months, we hadn't been able to do it.
And you brought that up a couple of times.
It's super important.
Mm.
So monthly basis 983, weekly basis 1,060, daily basis 1,035. Those are your numbers. From a cycle standpoint, this thing likes to do 45s and 90s. So if this low is good and we triangulated that low pretty well,
Hmm.
your next thrust up, your next bull market thrust could last you into 2028.
And the way things are going, we just might.
That's right. So anything else to add on beans?
No, we're good. And I'm
Yeah.
glad we've been covering it from the lows all the way up to getting started to warming up and all the different phases. So
And you can see each one of them's in a different phase, right?
yeah,
Like
yeah,
corn's already squared out its first leg, it's pulling back. Beans are pulling back as well. Didn't get as big a move. There's probably more to go in this first move for them, and wheat's just getting started.
right.
So that's it. The topic I wanted to address today was Barry was in terms of we talk about news events uh, and the cycles. How do we sort of obviate the human nature in wanting to know why something's going to happen or why something happens and because in trading that can be really detrimental.
Hmm.
Like I have to know why because we don't know why, right? When we make the move and by the time we know why, it's too late.
Hmm.
So what are the mental tricks or the mental sort of processes that you go through to sort of sabotage that human desire? I need to know why if I'm going to do something. I want to know why.
Right. Like having some logic, some
Yeah,
logical reason, right?
right. Because I think I heard it was either Soros or Druckenmiller said, if you're looking at a market and what it's doing doesn't make any sense, you should just get involved right away.
Uh,
You know what I mean? Like if it's going up crazy and it doesn't make any sense to you, he says buy it. right? And
Mm,
then figure it out later because by the time you figure it out and everyone knows, it's going to be much, much higher.
right. Well, I think, I mean, depends on the things you trade. And if you're a long-term investor, it depends on your horizon. I mean,
Right.
our scope is very short term. We basically hop week to week and we're more like swing traders, right?
Sure.
So from that perspective, I think the theme we've been doing, I think all of January about the psychology of well, trading. And I feel like, and we don't script these out. We don't even know the question until probably midway through the session when
It's
you
true.
think of something, right? So,
Right.
but looking back, what's interesting is my replies all kind of sound the same because it's really about extracting ourselves from that daily mix. I would call it like a homogenized mix where everybody does the same thing. Like the old days, everybody read the Wall Street Journal, everybody read this,
Hmm.
and then everybody's got has the same information. And now I don't think things are that different. We still have what's news is still somehow news, breaking news. I mean, something that first enters the stream, like today, about the tariff news, if that's what it was, but the
Hmm.
rationale, that entered the pipeline, and boom, all of a sudden the news is out. Everybody's reacting to it. Those things can happen, but you know, coming from a technical side, it goes back to your system or your approach because we're really, I mean, in order to frame that, you have to look at what's the foundation. Foundation really, we're looking to profit from repeating patterns,
Right.
and that's our bottom line. We're not involved in anything else. So in order to do that, you have to really trust how that works and trust the probabilities of how the numbers work out. And once you have that, you trust that more than having the ability to figure out the news or what's happening or why did that happen. A
Or
lot of the
why is it
time,
gonna happen? Like, why
oh,
is this gonna go up? Right.
well, that's the other side of the coin, right? One
Right.
is
Right.
it's happening. Oh my God, why is that happening?
Right.
So let's deal with that. Actually, the second part is really interesting too. So the first part is um, why is this happening? I think if you set up even the most simple system, majority of the time you'll be in the trade when the trade starts to move. You'll be in the right direction.
Hmm.
It's rare that you won't be, you know. So you have to set up a system, and once you understand your probabilities, your winners and losers and the ratios, and you start using it, what happens is all these other mental discipline stuff doesn't have to be hardcore where you have to like enforce it. Those things, I think they kind of emerge as a natural byproduct of you being disciplined. So if you just are disciplined, I mean, in another way, you can think, if I'm only doing it this way, your neural pathways are not going to be wandering around looking for other ways to do it. You're doing it one way and that's it. And that goes for ninjas and, samurais and anybody else that's really perfect something, right?
So it's in other words, the mind's focus then is on following the process and following the system as opposed to
Looking for logic or reason.
right thinking of the reason why or what's going to happen that's going to make that come to fruition.
Exactly. And that only works out, how often that works out because how often, I mean, even when we have all the information in relationships, you date somebody for years and you see, I can see how many marriages end up in divorce or separations
Sure,
or, so
sure.
you don't know. I mean, in market, we only have seconds sometimes and sometimes minutes on the short-term trade. So you really have to trust the system, the tool set that you bring into the table. And by really doing that, what happens is you automatically disconnect from having the need to know these other things in real time because you're not using that. So I think when people come into the market, fresh off the boat, like they say, then what
Right.
happens is we're sold all these ideas of, oh, you got to have the fastest news, the wire, the boxes, and have the inside news or the all these premium services. So all these things that we pump people, you have to sell them something. So you sell them, get the information fastest.
Right.
So people think somehow, oh my God, the information is important. It's important. I'm not saying it's not important at all, but you need to really master your system. Then you can put the information flow in the background to see, oh, is that disturbing what I'm doing? Because there's another place, right? Because we always tend to talk about entries. Where the news comes in is in management. If you know there's some numbers coming out, well, take some
Right.
profit and,
Right.
tighten your stops. And if you think you're coming into some kind of a phase where we know the morning numbers are coming out, well, obviously you need to adjust your positions there. So it's not about ignoring news, but I'm talking about the entry phase of it. Entry phase has to be very mechanical. Then the management phase of management of the trade, yeah, sure, listen to some news, know when the numbers are coming out, do all of that, and manage it as you see fit. And then comes the final exit, but that's also semi-mechanical. But the idea of going back to your question about how do we fight this urge to know? Because as if once we know that's going to be the correct thing, that's the first thing that's questionable.
Right.
Second, how many times do we revise the knowing? Like, oh, that's why. Oh, no, no, this is why.
Right.
Then we
Right.
figured out, oh no, this is the third thing is really why it happened. So we can't really count on that. We know how news works. So I think it's really about disciplining your approach that'll eventually unplug you from the need to know and want to know why
I think
something,
that's a
you know.
perfect place to end this topic for this
Mhm.
week
Mhm.
because I'll give you a perfect example.
Mhm.
There are times when you think you know the news and you actually do know the news, right? Like you guess right what the news is going to
Uh-huh.
be, but
Mhm.
the reaction you thought you were going to get from the market is totally different. So
Right.
even
Yeah.
if you had the perfect information, you still when you're not following your system and you're just relying on news or you think the reaction's going to be to the news,
Mhm.
it's a coin toss. You don't know.
Yeah.
How
Absolutely.
how many times have bad earnings come out and the stock rallies, or great earnings come out and the stock tanks? I mean,
Mhm.
it's a perfect example. So I think the message is, has continued to be throughout the podcast we've done in January, is if you focus on your system and focus on following it and executing on it perfectly
Being consistent.
and consistently, that's that's how you find success.
Absolutely.
So, anyway, as we told you at the beginning of the year, this year was not going to be boring. January was not going to be boring. I think, believe it or not, February may be more wild than January. So,
I agree. Yep.
when we tell you to rest up, I mean, I'm exhausted right now. When I
Yeah.
say rest up this weekend because the trading weeks are going to be crazy. I
Intense.
mean,
Yeah.
I heard a forex stop hunter was saying on their show that they do. He was saying, "I'm going to have a great year this week." And I think that's the type of action we're getting, and we
hmm
can see that this year. So we really appreciate your support. Please, like, share the links, subscribe to the channel, help us grow it, and have a great week, everybody. Great job, Barry, on the show, and we'll talk to you next week.
All right. Good job, Ben. We'll see you next week, and I'll definitely get the rest,
Yeah,
as it's available.
that's
So,
right.
all right. Take care, everybody. Take care,
Take
Ben.
care. Bye bye.
Bye.